Gary, you spend a lot of time dealing with Chinese enterprises. The slowdown in China, do you think this will affect the prices of coal and other commodities in the next year or so?
I think it has to. It has to. If manufacturing is going to slow down because of the lack of demand from the United States and from Europe, then there's going to be a lesser demand for energy. So I think it does have to impact on the commodity prices. I guess it's all completely dependent upon how long this slowdown, this recession is going to go for.
You sell coal to China. Do you source that from Australia or from other places?
Well, actually, we've been sourcing it from Indonesia. We've just signed an agreement with a large state-owned enterprise in China to source coal. They've commissioned us to go out and find coal for them. This is the first time that they've imported coal from anywhere else in the world. They've mainly just imported it a little from Mongolia, but mostly internally. So they're unfamiliar with importing coal from overseas.
Now, is Indonesian thermal coal cheaper than Australian thermal coal?
Yes, it is. Yes, it is.
By how much?
Well, it depends, but and it's you have to really compare apples with apples. And the Australian thermal coal and Australian coal in general is a very high quality coal. A lot of the coal that we're importing is of lesser quality, and it's going to some of the country regions within China where they're happy to accept a lower quality coal. But if we're to compare apples with apples, it's probably 10-15% cheaper. You must remember that Indonesia is the biggest exporter of thermal coal in the world.
Where do you think the opportunities lie in exporting to China? Apart from, like we all know about iron ore and coal and things like that, but
yeah.
Are there other opportunities that are going to arise in the next few years?
In consulting services in expertise, in manufacturing, engineering, business, international law, international finance, etc. And there's so much written about the demand that China has for expert services. So I really think from an Australian perspective, it's going to be accessing the Chinese market and providing those services.
When you say manufacturing services, don't they already have the expertise to do that?
The large multinational, international companies do. Yes, they do. They're working on best practice, and that's how we went to China. We set up the engineering department for Glaxo Wellcome in China in 1998. But in terms of the Chinese-owned companies and the state-owned enterprises, no, they don't. They throw a lot of money at things. There's a lot of waste. They're inefficient. So it's implementing these best management practices into these Chinese and these state-owned enterprises. And plus, there's a big shift to from multinationals, international companies, to establish themselves in China to access the Chinese market. And they want to implement best practice. They need Western Chinese thinking people to help them implement best practice into their facilities in China.
Are they nervous about dealing with Americans on this area? Do we have an advantage as Australians?
Yes, we do. Yes, we do. There does seem to be a disconnect, particularly at a political, bureaucratic level. The Chinese really do like Australians. They do, and I believe that we have a lot of common characteristics and traits.
Do we?
We laugh at the same things.
Really?
We do.
What do we laugh at?
Our jokes seem to be transferable to the Chinese. They really do.
I suppose tourism will be a huge market.
Correct. I think some of the more fragmented, smaller markets, such as the wine industry, I see we're the third largest exporter of wine to the Chinese market in terms of volume, but in terms of dollar value, we're equal with Chile. Okay, so I think we've got a fair bit that we can offer in the wine industry and those smaller industries.
So, of course, in wine, the French got in there, and they're very big, aren't they?
Yeah.
Now, Gary, you've developed two businesses which you sold to somebody else.
Mm-hmm.
Would you advise people to, when they're starting a business, to have in mind who you can sell it to?
My first business, which was an electrical business, which I sold to Siemens in 1992, I felt I'd taken the company as far as I could. It was a very difficult time economically at that time in 1992. If we go back to 1992, it was pretty tough. And I felt that I wanted to move into a better business. And basically move forward with the business that I was in. I wanted a better business. Okay? And I felt that the construction industry wasn't as solid and as robust as what it could be. The second business, the electrical business, the second electrical business, which basically provided all the services for the IndyCar races, the V8 supercars, the concerts, etc. I sold that in 2007, really so that I could concentrate on what I'm doing now. I've been spread a little thin at different times with companies in China and the different businesses that we were running. I really felt that I needed to concentrate on the business that I've got now.
Well, just explain briefly, what is it your source business is now specialising in?
Okay, we have a company in China and a company in Hong Kong. In China, we have Chinese and Western people working for us there. They specialise in import and export. Export from China, import into China. We're bringing in industrial electrical products, renewable energy products into Australia. Plus we're also looking at sourcing different products. We've just been successful with a contract to supply the bath towels to the Australian Defence for the next 5 years. We've already sold the Department of Defence container loads of sandals and footwear and knives and different things like that. Where do we want to be? We want to expand our product line and different offerings into Australia. Plus we also want to provide that consulting service or that import-export service to other clients from Australia.
And you're thinking of IPOing?
Yes, we are.
In Australia or Hong Kong?
We would look at Hong Kong first. Well, a trading company such as ours is pretty well regarded and considered by the Chinese market, by Chinese investors. They're familiar with trading, they're familiar with doing business in China. And I really see us as a Chinese company. We made big attempts to become a Chinese company. We've removed, we're an Australian company doing business in China, to we are a company, one company, two systems, basically. So that's the main reason. But in addition to that, we're looking at the Hong Kong GEM board, not the main board. It has a very good price-earning ratio. It's easier to...
So you'll get a better price in Hong Kong than you would in Australia?
Yes, we will.
Okay.
Yeah, the current price-earning ratio across the board, across the all the companies listed there is currently 22.
Okay. Here you'd be lucky to get 10.
Yeah.
Double the price in Hong Kong.
That's correct.
Okay.
That's correct.
Just one final point. People who trade with China, what's the biggest mistake they make?
Buying on price. Buying on price. You really need to get the specifications and the technical aspects of whatever they're procuring correct first. So focus on that. You can push suppliers in China to a price and they will agree to the price, but then they will go back and cut their cloth accordingly. So it's just buying on price. In addition to that, people believe that they can conduct business in China on a fly-in, fly-out basis. And that's a little bit dangerous because you go there, you've got so much to do with it in a week, and it takes time to do things in China. It takes time to get things right. You have to make sure that your requirements are really clearly articulated in a very Chinese way. If you do that on a fly-in, fly-out basis and you're really sort of going over there to look at prices and to tick off the quality, to tick off the freight, tick off the logistics, tick off the terms and trades and all that in a week, there's going to be mistakes made.
Thanks, Gary.
Pleasure.